you had the same type of spike up. And back then, it was a shortage of deliverable bars that had developed, and they blamed it on backups at refineries because of COVID logistics. So they had a cover story for it back then. Well, we know that there's been a growing shortage in deliverable bars, gold and silver, in London, right?
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and a lot going on. And I know my dear friend Dave Kranzler of Investment Research Dynamics has plenty to say. We have tariffs that kind of went into effect on Saturday, and now we're, at least as of Monday, hearing some potential changes to that. And of course, we've seen the alleged impacts on the gold and silver markets. We've seen the EFPs spike and some debate over what is really causing that, whether it's the tariffs or not. So, fortunately, who better to have on here to dig into all that than one of the grizzled veterans of the gold and silver industry? Some say he was there when the first ounce of gold was actually mined. So, Dave, great to have you on here today. Your encyclopedic, century-wide body of knowledge. How are you, sir?
Good. Thanks for having me on. A lot of people might think it's idiotic, not encyclopedic.
Yeah, well, I mean, you've been around for a while. Maybe we'll get a story of what it was like in the Roaring Twenties as well, I have a feeling before the inflation is said and done. We may have another Roaring Twenties, but Dave, first of all, can you catch people up to speed? You and I have talked about this a lot. Your thoughts on what's really going on with the EFP, whether that is the tariffs or not, or whether there's some bigger issue underneath the surface, and perhaps you could explain what you're thinking and seeing.
Yeah, well, first of all, if you just kind of think through logistically with the tariffs. So, but first of all, do you have a copy of that graph that was from that Financial Times article last week, right? Or you've seen it at least?
Which one are you referring to?
The graph that shows the spike up in COMEX reported gold inventory in
I'll pull
2020.
that up in the background here.
Yeah, you know which one I'm talking about. I mean, we had the same type of spike up in inventory back in 2020, and that didn't have anything to do with tariffs. There was a shortage of deliverable bars of gold, and so that's and again, I'm not 100% convinced that all that gold has been actually moved into COMEX vaults. I think it's accounted for as if it is, and we can get to that in a second. But you had the same type of spike up, and back then it was a shortage of deliverable bars that had developed, and they blamed it on backups at refineries because of COVID logistics. So they had a cover story for it back then. Well, we know that there's been a growing shortage in deliverable bars, gold and silver, in London, right? I mean, that's to me. I mean, I don't remember who first started talking about it. Maybe Bob Coleman or something, but well, he was pointing to the cost of the borrow for SLV, but also the cost. The premiums on EFPs went up, right? Well, that was before anyone was breathing a word about tariffs, and the premiums on the EFPs went up because there's a shortage of gold. I mean, Alistair McLeod's been talking about, and Andy and Andy live from the vault. I mean, they've been talking about shortages developing in London now for many weeks, right? So I just think the tariffs are being used as a cover story. I mean, think about it logistically. Okay, so let's just say, oh well, because there's gonna be tariffs on silver that's exported to the U.S. from Mexico, or gold exported to the U.S. from Switzerland. There's going to be tariffs on that. It's going to make the prices of gold and silver go higher. Well, in my mind, it's only going to affect the availability of gold and silver, or the cost of gold and silver in the U.S., right? I mean, there's not the same tariffs going on gold and silver that are being imported by other countries, right? So it'll affect the premiums if in fact if it does anything. and again, it's not even, it hasn't been clarified as to whether or not there's going to be, if gold and silver will be exempt. So, I mean, silver's, kind of a it's not officially declared a strategic metal, but it's used in defense applications, right? So I don't think Trump would want the price of silver to be more costly in this country because of tariffs. I mean, it would hurt defense manufacturing, right? So I think what the tariffs,
Well,
if in fact they
Dave,
actually happen, I think they'd affect the premiums on minted coins, and it would affect the prices that U.S. buyers have to pay for gold and silver. Well, think about it. Mexico ships a lot of silver here, right? So if they decide, oh well, we don't want to pay the tariff, and they can ship that silver. There's buyers for that silver all around the world. It was just it costs more to transport it to buyers overseas as opposed to transporting it to the U.S. So they'd have to, the Mexican mining companies would have to decide if they want to, if the cost of the tariffs is higher than the cost of shipping that silver elsewhere in the world.
yeah.
So, in my opinion, and I'm fine if people disagree with this, but I don't think that the tariffs implemented by the US on Mexico and Canada, and possibly the EU, which would include the UK and Switzerland, I don't think that it's going to affect the global spot price of gold. I think what you're seeing here, well, there's two factors. One is supply and demand of gold bars in London, right? I mean, that's being openly acknowledged now. And then the second thing is, and I wasn't paying attention to the to the Fed's M's, the money supply measures, but I saw it last week. M2 is almost at an all-time high right now. So quietly, no one's talking about it. The Fed isn't talking about it. They're talking about reducing the size of their balance sheet and raising or cutting interest rates. They're not talking about the money supply. It's almost at an all-time high. Were you aware of that? Just zoom into the last 10 years. So so if anything, it's the devaluation of the dollar caused by that increase in the money supply that makes it appear as if the prices for gold and silver are going higher. And look when that curve started turning higher. See, everyone was looking at the year over year percentage change in M2, and it was tanking up until I don't know, late 2023. But M2 started rising in March of 20, maybe at the end of February of 2023. It started rising. And so in my opinion, and that's why the price of gold and silver are a lot higher right now. So you have supply and demand issues not caused by the tariffs, because the supply and demand issues will only be in this country because of the tariffs. And then you have central bank, and it's not just the United States that's devaluing its currency by pumping liquidity into the financial system. I mean, China's probably pumping more into theirs than we are into ours. And that affects the price of gold globally. So and that rise in M2 would explain why we're in a massive asset bubble, a massive stock bubble. It would explain why gold it keeps hitting all-time highs. And it would also explain why housing prices are so sticky in this country. And it explains why inflation is much higher than the Fed claims it is, or the government claims it is.
Here we can see on the M2 chart just under 12 in December of 2014 and now up at 21. So a little less than a double. If you go back a year or two, you can get that double. And obviously that will have its impact. And Dave, just a comment on one other thing you mentioned about whether there would be an exemption and for gold and silver. As of Monday morning, I saw a report that so far there is no exemption. Obviously, that is a fluid situation, as they say. So we'll see how that changes. Although going back to what you said in terms of thinking this is more of a supply issue than the tariffs, let's say that is the case. What does that environment look like? Something maybe we would see something similar to 2020, or is there a bigger disruption? Obviously, there's some degree. We've talked plenty about unallocated gold and multiple claims per ounce of gold, and the idea that at some point that would create some sort of delivery issue. But if you are correct with what you're saying, what would you think the environment looks like?
I mean, they if you recall, the way they fixed the delivery shortage in 2020, it was supposedly shortage on the COMEX, was they created that enhanced contract, right? The COMEX contract that was backed with 400-ounce London bars. And that all of a sudden, made people happy, or made, they presume it headed off a run on the vault, right? No one takes
Were,
that much gold out of the COMEX anyway. It always seems to stay in there.
were you
But
happy that day, Dave?
uh, I mean, to me, it was just another way of using derivatives to kick the can down the road. Now, what's been happening since then? You've had 2 to 3 years in which Eastern Hemisphere central banks have been buying an enormous amount of bars, right? And they're not buying 100-ounce COMEX bars; they're buying 400-ounce LBMA bars. And I just figured at some point, if these central banks kept going, and they kept going, I think 2024 is going to turn out to be an even bigger year for central bank buying than 2023. Um,
Looked like a little less, but not all that far off last I saw, but in a
I
similar
haven't seen
ballpark.
final numbers, but anyway, nevertheless, I mean, we don't really know how much is really going into China. And certainly China doesn't make those numbers available for public consumption. I'm sure you've seen that dude Jan Nieuwendyk, or whatever his last name is. I'm sure
New
you've
and
seen
Bex.
his reports where he documents with source documentation the fact that China's bringing in a lot more gold than is publicly acknowledged. So, I mean, to me, and also you've had, it's not just, the big Eastern Hemisphere countries that are doing that: Russia, China, India. You also have the smaller countries, a lot of them, Russian satellite countries, or were spun off from Russia, that are, the stands. They're also doing the same thing. And more importantly, not only are they buying the gold, they're not leaving it in London for LBMA custody. They're repatriating those bars home. The most surprising one to me was Poland, because Poland is basically a NATO/US lapdog country, right? I mean, they let us put offensive weapons and missile systems in their country pointed at Russia. But I think they've announced at least 100 tons of gold that's been repatriated from London. It may be 200.
They
India,
publicly stated they're aiming for 20% of reserves. So
there you go. And then India started repatriating its gold out of London, right? And there's another Western lapdog country politically, but not anymore, apparently. So there's definitely, in addition to understanding now that if you don't have possession of your assets, if they're in possession of custodians outside of your country, you're at risk for having it confiscated, right? We saw the US do that to Russia. And so I think that's part of what's been driving this repatriation of gold. Because, who cares if they steal your fiat currency credits sitting on a central bank's ledger? It's the physical gold bars that are the issue here. So, and then I thought it was interesting. I didn't really think about this. Well, I think part of it is obviously Russia and China understand what the situation is, the imbalance, the upside down situation between LBMA and COMEX paper derivative gold and the actual number of bars backing the contracts or the forward contracts that have been written, right? So rather than attacking that situation by going on and trying to squeeze the COMEX or trying to squeeze the forwards market, the better way to do it is what they've been doing. They've just been wearing down the supply of gold. And it's right, so it doesn't look like it's being belligerent. It doesn't make it look like they're trying to sabotage the Western monetary system by removing all the gold from it. But that's in effect what seems to be happening. And I thought it was interesting that Russia announced that it was going to start buying a crap load of silver for its sovereign wealth fund. And
But
it
they did
knows
not
that
say how
it
much.
knows silver's in a supply deficit and has been, right?
Yes, I would assume they are aware of that. Now, keep in mind that at least I did not see them put an amount of how much. Now, it could be a lot, could be a little, although I think
I
just the premise that they're doing it to me is significant, although I don't know how much they will buy, but
at the margin, it probably wouldn't take a lot to squeeze the silver market.
Dave, although even more important question, what do you think are the chances that Vlad will request a 10,000 ounce silver panda wall art like you have at your crib there?
I don't know.
I have to say, as a silver investor, the fact that you have that massive giant panda is just a complete baller move and really an inspiration to the kids watching at home. So now, with that said, and I get what you're saying about the central banks, we'll see. Certainly, Russia was an interesting data point. Although, Dave, back in terms of the U.S., in addition to the tariffs, we also have the Doge board, and I hear Elon is he's going through there finding a lot of stuff to cut. Where do you come down on the debate of if, let's say, they actually do make substantial cuts? They'll still call somewhat of a big if, but if they do, does that give us a larger or smaller deficit in the longer term?
I mean, Musk has already admitted they're not going to be able to cut 2 trillion out of government spending. I don't think what their Doge is going to get done. I don't think it's going to dent the spending deficit. I mean, on the one hand, they're cutting, they're shutting down some programs, et cetera, laying off employees. But then I think it was over the weekend, I mean, Trump announced some massive new military spending program. I forget what exactly it's for. I think it might be for missiles that compete with Russia's hypersonic missile or something like that. But I didn't spend a lot of time researching exactly what it is because any kind of military spending irritates me, beyond what we need to defend our borders. But so all of a sudden he wants to cut one side of government, which is fine, but then he's taking and increasing expenditures on defense, right? So I don't. Here's the problem, and there's plenty of guys who point it out. Alistair McLeod points it out all the time. The way our monetary system is set up, the fractional reserve banking system that's based on credit, right? I mean, people think that the $20 bills in their desk drawer or their wallet is money, right? It's not. It's a note. It's credit. The whole system is predicated on credit. And the only way to generate growth is to keep increasing credit, right? Ad infinitum. And so if Trump were able to take a big enough axe swing and cut government spending, our economy is going to like go drop into a really bad depression very quickly.
Right, and that's what I was getting at with that question, where it's on one hand, should you not waste a lot of money on frivolous stuff? Yes, although it's kind of like we're already a little bit hooked on it, so those are the consequences, and why I lean towards the side that I think we would probably have a bigger deficit. But anyway,
And I'm pretty sure they'll try and find ways to to hide how much they're spending with accounting gimmicks and things like that. What you got to watch is just watch how much the debt pile grows every month. That'll tell you how much they're spending, deficit spending. I mean, we started the first quarter of the government's fiscal year, which starts October 1st. The first quarter was like a record run rate for deficit spending. So I don't see Trump really doing much materially that's going to slow that down.
I hear you. I know I've asked you this before, but do you think that we are heading inevitably to some form of reset? I mean, the math is what it is. And to the degree that a lot of the reports and it from analysts I read about what's going on in Ukraine is that we got our lunch handed to us, and especially if the US wants to go to war against China, it's kind of to the point where it's like, hey, could you build us those missiles so we can launch them at you? And especially then you tack on the things that Trump is talking about doing it. Hearing a lot more chatter about the idea of a reset, I think starts to make more sense where we are now. And with Trump in there, it seems more plausible than with Biden or George Bush in there, given some of the people he's associated with and Judy Shelton, Elon, that they're talking about Ron Paul. So, with all that said, do you any thoughts on that? I know there's not an exact answer until something like that happens, but is that possibility growing in your mind at all?
I mean, how do you want to define monetary reset?
Some sort of adjustment to the gold price or to the degree that it seems like he's interested in it. If there's could include Bitcoin in there to the degree if they can get the Bitcoin price higher and you get Tether buying more treasuries,
They
something
can't
of
use,
that nature, some sort of revaluation of the currency system.
but you also need you need a federal government balance sheet reset also. I mean,
Right.
there's already weight. China needs one as well. So does Japan.
I mean, do you think we're
So
getting close enough to the point where it's not just gold and silver investors that want it, but that I hear that there are people within Washington that make these decisions that are realizing that it's now problematic for defense, which may be what it takes to actually get some movement on that. So I think we're entering a realm and a stage of this cycle where it's at least becoming under consideration is my feeling, and but I'm curious what you would say to that.
I mean, I think eventually the market's going to force the issue. I mean, to me that's part of the reason why the Eastern Hemisphere Alliance, call it for lack of a better name, the BRICS, the SCO, the Shanghai Cooperative Organization. There's another economic organization that's like an umbrella for East Asian countries. That's and well, and also I mean some South American countries, and actually even now some African countries are buying a lot of gold. And I don't know why you would be doing that unless you're worried about the future of the dollar. So I think the concept of a monetary reset like that, I think in terms of the logistics of it, I think it's very complicated, and it's going to take a lot of time for that to happen, for the systems to be put into place that would enable that, right? Just look at how long Russia and China have been working on alternatives to the
Well,
SWIFT.
that's just what I was going to say. I mean, you could also look at it from the perspective that they're 10 or 15 years in. And I know people were disappointed last year when the summit came and there was no official unit launched, although Pepe Escobar, who's done a lot of the reporting on that, who I'm trying to track down and see if we could get him on the show.
That would be
I,
awesome if you could interview him. That guy he's got contacts somewhere high up in Moscow.
Yeah, and right before the summit, I watched an interview that he did, and while he was reporting on that it is a concept being discussed, the guy asked him, "When do you see something like this taking place?" And again, this was days before the summit. He wasn't saying that it was supposed to happen at last year's summit, but that a concept like the unit as he's written and described it, he put I believe he said 2029 or 2030, so that it is a process. It won't be overnight yet. Also, there's a bunch of years of foundation that have already been done.
Yeah, I mean, I thought I read somewhere that Russia was already testing its SWIFT system or its SWIFT alternative. So, but yeah, I mean, it's not just an alternative to the SWIFT trade settlement payment system, right? I mean, there's all kinds of logistics and information systems that have to be set up if you're gonna have a new currency that is monetized with gold and maybe silver. And
Well,
certainly you probably need a big price reset for the price of gold to make that happen.
I think there's few people watching this who would be okay with that. And Dave, fortunately, I guess this will be our last one for you. In terms of all of those dynamics, I know a good place where you can find about dynamics. And of course, that is investmentresearchdynamics.com. And perhaps you could just let people know about what you're doing with the journals there or anything else that they should be aware of.
Sure. I mean, the Mining Stock Journal is every other Thursday, and I mean, I'm probably more weighted towards finding junior project development companies, where the stocks are high risk, high upside. But I also have a handful of what I think are quite undervalued mid cap, mid tier gold and silver producers that I also cover and recommend. And there's more information on the link there. And then the short sellers journal is kind of self-explanatory. It's a weekly bearish tilted newsletter. So and this last issue, I just did a write up on Nvidia. So
I was going to say, I'll bet you were busy last week on that one.
yeah, that's getting very interesting. So and then I also have a Substack now, Mining Stock Journal Substack, and the way that's set up, it's like yours. There's you can subscribe for free for limited content, or if you do the paid subscription, it includes a subscription to the Mining Stock Journal.
Well, I think that's pretty handy, especially, it's one thing to dig into gold and silver, but the mining stocks and especially some of the juniors that you look at is it's a whole different environment and certainly a task that I think it's good to have some good insight from multiple people, of which certainly you are one of the experts. So, Dave, you want to show people where that link is in the description field below? Oh, there he goes. He's still got it. And perhaps just last one in wrapping up, we did have a call with Fortuna. I guess that was 2 weeks ago now. And Fortuna kindly sponsoring today's video and did have record production out. Any thoughts on, I think you saw the call that we did with Jorge and also, we have the full year in, and I know you've obviously gone through this press release. Any thoughts? And that's something else you also shared in your mining stock journal. But any thoughts on 2024 at Fortuna?
I mean, I think that Segala mine alone is worth the market cap of Fortuna, and it just, I mean, I just can't believe how much gold they're finding on there. I mean, now they have six deposits that they can mine, and they've got a seventh that that probably be if they're ready to mine it, and if it fits in terms of the grade, if it improves their sequencing, they probably start mining that next year. Then they've got those prospects in the northern part of the property. Name escapes me right now, and I was not expecting that to be included in the revised inferred resource, but it was. So, and they've got, I think Jorge said they've got over 30 different targets that they still want to test, at least that they know of now. So it looks to me like eventually, and again they've already exceeded the production from that mill without spending money on increasing the physical size of it, right? The processing capacity. So at some point down the road, they'll probably end up doing that. They got to find enough resource to justify it. But in my mind, there's no question they will. And then you've got the Diamba Sud project, and it looks like that thing could end up being more valuable than was thought when they acquired it. So I think if you buy Fortuna at this price level, you're getting everything except the Segala mine for free. So to me, it's a very undervalued stock.
Yeah, well, certainly has been fun following, especially these past couple of years where you see them go out, buy the mine, bring it into production, and nice to see, especially as the gold price spikes, that you get record production at that particular time. So, again, I will mention that all of his mining stock
Just
analysis.
real quickly, I mean, I
Oh,
think part of the issue there is I think a lot of potential investors freak out at the thought of West Africa, right? Because that's where Segala is. It's where Diamba Sud is. They've got some other. It's where Yaramoko is. And I think in general, I don't think people understand just how low risk most of the West African countries are. Like Mali has some issues, and Burkina Faso has some issues. But I don't see, other than spending the money to keep the Yaramoko mine producing, Fortuna's not investing in Burkina Faso right now, although they have a property there that they got when they acquired Roxgold that they could develop. Um, and and then they're in Senegal, which is also extremely mining friendly. So I'm not sure that I think the potential political risks, especially for countries like Cote d'Ivoire and Senegal, I think it's misunderstood by the market, and I think that's part of the reason why Fortuna is mispriced, in my opinion.
well, that makes sense, and obviously the jurisdiction risk important. Although I think that's one of the things that's been nice to see Jorge's ability to manage that in the different places he's going. So,
I think it's easier to get a mine permitted in Cote d'Ivoire or Senegal than it is in the United States or
well,
Mexico.
that may well be true, and that is why Dave has the mining stock journal, which I still think you need to raise the price on that myself, but I'll
Well, I
mind my
did just
business
raise
and say
it a
it's
little bit.
okay. Well, still a good deal for people, and in the description field below. So, David, I thank you for joining us. A lot we covered today. Great to catch up with you as always.
Likewise.
And for everybody watching at home, a sure thank you for being here. We also thank Fortuna Mining. And if you'd like to see that call that we recently did with Jorge, the CEO of Fortuna Mining, well, that one's coming your way now.